This video is about Fed Jackson Hole speech, August 2022. Short term and long term. It have different meaning. Now let's see long term. For short term, you can watch this video. Before Jackson Hole speech, I explained in detail why Fed will be dovish. But now this video you will learn in long term why it is hawkish. Short term it has different meaning, long term it has different meaning. So I will use gold weekly chart so you can understand better what Fed is saying and how it will affect entire market long term. First, let's see this last line in the end of Jackson Hole speech. Fed made clear over the period 22 and 4. September 2022, almost 3 years ago, when gold started making bottom. Now on this top, market top, Fed is saying departure from about 2% inflation target. In simple way, if you see, currently all inflation indicators CPI, PPI, which came before Jackson Hole, which defined short term that was dovish. He ignored more than 3% inflation. PCE, especially core PCE, which Fed say all the time his favorite inflation indicator, which came after Jackson Hole speech last Friday, 2.9%, where he said during this period on gold chart from top to bottom, departure from 2% inflation target. They were targeting average inflation. That's mean more than their 2% inflation. And result was gold double from bottom 1620 to top 3500. Secretly, all insider, all big banks know what Fed was doing. That was 2 years before election. That is 1 year before election. They were targeting more than 2% inflation. That's mean to skip recession at all cost. That's mean they start supporting NFP with monetary policy and fiscal policy. Now Fed is saying that experiment failed, that will not work. When gold went up from 1620 to 3500, election cycle over, 4-year election cycle reset. Now Fed is saying average inflation, more than 2% inflation, that will not work. Indirectly he is saying he will target exactly 2% inflation. Core PCE was 2.9%. According to Fed, his favorite, that is main inflation indicator. Then long term, that Jackson Hole speech is hawkish and Fed must react aggressively because 2% and 2.9%, that is big difference. And gold was vertical last Friday, it was jumping because almost no FOMC members say anything about that core PCE number. Despite high core PCE number, Trump constantly fighting against Fed Cook to pressure Fed to lower interest rate. So this week you have so many Fed speak. Before everything become clear on last FOMC speech, listen carefully what they say. What Fed have made one thing clear: more than 2% inflation failed experiment they will not target anymore. They did from 22 to 24 period. Powell accepting and saying clearly 2 years before election and election year they were targeting more than 2% inflation, or in simple way in theory which we say is stagflation. Doing rate cut when inflation already up, doing premature rate cut. And last year narrative was central bank gold buying, de-dollarization, debt spending, and many hot war. But now everything is replaced by one narrative: central bank independence, and Trump fighting in court with Fed Cook. When entire party over, now Fed explaining, now President explaining what is happening. I cannot say intraday where gold will go, but after this speech I can say, like Fed is saying, 2-year period. Next year 2026, election year 2028, gold will be trading below 3400. 2 year or 4 year from now, I can say gold will be trading below 3400, long term trend over. But funny thing is, nobody is saying this thing. You can see inflection point 1 year ago, right there in sideways range. May 2024 FOMC meeting, Fed officially said no stagflation. You can watch that FOMC speech. There was clear no stagflation. But 1 year later, this year, May 2025, same Fed was saying stagflation. But he wait for gold to go up $1,000. You can see he was talking about high tariff in Jackson Hole speech before next September FOMC speech. Court order to block Trump tariff. So tariff uncertainty decreasing after Jackson Hole speech but before next speech. He used that NFP revision as excuse to be dovish after that Jackson Hole speech but before September FOMC meeting. There will be one more NFP and there will be one more NFP revision on September 9. So before next FOMC meeting, labor market will be more big. You can see now Fed is saying inflation has been above target for more than 4 years. Gold is higher than it was 4 years ago because Fed officially saying it has been above target, which is 2%, and famous indicator is CPI. It was about 2% CPI inflation for more than 4 years, and result is you can see gold is up all the time. Stagflation cycle, that's been 50 years ago. That's in Paul Volcker time. There was stagflation crisis, then Alan Greenspan come. Secret 2% inflation target, which was secret hidden all the time until Ben Bernanke came and he revealed 2% inflation target. But Powell come, he totally changed 2 to 3% inflation target. So without using the stagflation word, great inflation, their code word for stagflation. So Alan Greenspan secretly adopted 2% inflation target. Debate began under Ben Bernanke timing, but Powell changed from 2% to 3% inflation target. A result was stagflation. When it was near 3%, he become hawkish, gold goes down or sideways. When it start falling towards 2%, he become dovish again, gold start going up. So all those narrative which you saw last year and you are seeing this year, they all stagflation. You can see if recession come, 2022 what we saw, that was short recession. Last time real recession they have in 2008. What happened later? Slow growth, painful, slow recovery. Because after recession in 2008, recovery was very slow. But this time recovery was very fast. Every time market dropped 10%, they cut or become dovish. You saw under Biden term, Jackson Hole speech. You saw under Trump term, when they pivot on tariff, almost 10% market crash, immediately Trump pivot. So there is a recession, but there is no painful recovery. Immediately they pivot. Last time in 2008, since then, market have no real recession. So without using the word, they are using code language. 40 years, that's mean last stagflation cycle. Highest inflation during last stagflation. You can see 2021 under Biden term, first year after election, they ignore inflation. They ignored 0% interest rate with QE, $1 trillion fiscal stimulus, and start stimulating economy. Result was big spike in inflation. Same thing Trump did immediately after election. 4-year election cycle, if you add 4, that's mean 2025. Since the beginning of Trump term, you saw big dollar. Gold was flying all the time. So which confirm Trump did same to same mistake like Biden. Immediately after election, they start simulating economy. When they have inflation problem, immediately their tone change. This is same to same playbook like 2021. Biden try reflation immediately after election. Trump try reflation immediately after election, but they pivot heavily in June, and we have to see when Trump will pivot in September FOMC meeting, but playbook is similar. You can see they tried rate hike same like GFC era, but there was no major recession like 2008, because this time they increased so much debt that monetary policy rate hike almost have no effect on economy. You can see now Fed explained after gold went up from 1620 to 3500 2 years before election and 1 year before election, when he blindly ignored and say no stagflation. Almost a year ago, that's mean in election year. Flexible inflation targeting, markup strategy. When inflation began flying about 2% on CPI, when they were saying transitory inflation, they were experimenting with flexible inflation target. When it become out of control about 2%, start flying more than 3%, their tone start changing. But Fed have made one thing clear, that experiment failed. They will not target more than 2% inflation. Markup strategy, flexible inflation target. If that is the case, somebody have to explain what they think after 2.9% core PCE. You know, CPI inflation went down from 9% to almost 3%, now sideways near 3%. But that required sharp increase in unemployment. But 9 September NFP, just wait and watch. Now they will reveal real employment data that was hidden because of election. You can see main line, in absence of inflationary pressure, no need to tight policy. Every time inflation start falling near 2%, they become dovish, start simulating economy. Now this line again from Jackson Hole speech. I think long term, because of that line, it is hawkish. 2022 and 4 period, departure from 2% inflation target. That experiment failed. Now they will not target 2% average inflation target. When this bottom came till July FOMC meeting 2023, they were doing rate hike, and everyone was confused why gold is going up into rate hike, because that was secret, only available to big banks and insider. The strategy was to shift from 2 to 3% inflation target. That's why market was going up during that time in a rate hike. And because first time to hijack their monetary policy, Biden increased debt so much that rate hike effect did not slow the economy and there was no recession. And because of debt increasing, because of that inflation drama, gold was going up in vertical line and it was 2x during this time. But one thing, as a beginner you can notice, entire party over. Gold went up from 1620 to 3500. Now Fed explaining why it went up. So why this Fed will explain you what they will do next 5 years. What they target in 2026, 2028. This JD Vance, after Trump, this will be new president. In 2028, they win election or not, but 2028, after Trump, he is next. Yesterday when gold was exploding, he said elected official must target monetary policy. That is anti-democratic principle if they do not have permission to set interest rate, which they were doing for last almost 4 years. They did it in 2018 for Trump, Gold made bottom exactly same time. Right there. They did same thing for Biden. 2 years before election, gold made bottom exactly same time, which now Fed explaining in detail. Because only president change, political party change, but Fed chair was same, Powell in both conditions. Later both tried again in election year 2020 Trump and 2024 Biden. So both tried 2 years before election and in election year. But now Fed explained why last 4 years inflation was up above the 2% target all the time, and now the departure from 2% inflation target. I made a video 2 years ago about stagflation because that time we do not have access to this information. That Fed was secretly targeting flexible inflation target, markup strategy. But now we have that information. You can watch this old video where I said gold can stay up until Powell leave, until stagflation stop. But after all those years, more than 2 years, we have more information, and now there is a race. Trump fired Cook last week, full case, court drama. He want to fire Powell, but before Powell leave officially in May 2026. Officially in full detail he explained why gold was up during that time. Because they were targeting flexible average inflation target more than 2%. You can watch this video like part 1 and you can watch this video like part 2. What happened later? The entry strategy and exit strategy. That's why I say long-term Jackson Hole speech is hawkish. But if you need all the data, how I get confidence and Fed secret language saying everything without using the word stagflation, this line which change everything, which I think make Jackson Hole speech hawkish long term. Over 2022 and 4 period, when we departure from our 2% inflation target. How they do it? Last time in first stagflation cycle, you can read entire book, you can get all the data. NAP, CPI, PCE, FOMC member statement, market reaction, everything is same to same. And writer of the book, Alan Brinder, he is ex-FOMC member, and so many times last year 2024, Fed repeated his name. He did not say directly to read that book, but said many times the research from Alan Brinder. You can see I shared this book in May 2024 when Fed said no stagflation in May 2024 FOMC meeting. But now they said experiment failed. Still they are not using the word stagflation, using code language. But now 1 year later, since May 2025, they are aggressive on stagflation, and meeting by meeting, they are predicting stagflation.